today we will start other sources. A couple of problems are there in capital gain, but I suggest that you read the theory well and then we can revisit that, because at this moment, if we keep on doing, it will not really benefit you. So let us start other sources. This is the residuary section, as we have earlier discussed about it. Whatever is not coming under the other heads will come here, but yet there are certain rules for chargeability. As per section 56(1), income of every kind which is not to be excluded from the total income under this act shall be chargeable in the income tax under the head income from other sources. If it is not chargeable to other four heads, what we have studied. So that means whatever is not chargeable under the other four heads, but it is chargeable to tax, will come under this. But there are certain conditions. There must be income. Income is not exempt under the provision. If it is exempt, it doesn't come, right? Such income is not chargeable to the four heads: salary, house property, profits and gains, capital gains. Other source, therefore, is the residuary section. Residuary means when you do chemistry and all, you would have done the residue. Whatever is left out of it is called residue. What is the method of accounting? Again, like the other ones, income chargeable and said is to be computed in accordance with the accounting policy regularly employed. What is regularly? If the books are maintained on mercantile basis, then the income is to be computed on due basis. If it's on the cash basis, it will be on, on the basis of receipt basis, and expenditure shall be allowed as a deduction on payment basis. So both is all same, we have seen earlier also. However, having said that, there are certain incomes which are mandatorily required to be taken under this head. What are those things? We'll look at. These are, even though it may seem to be coming under business, yet here it is mandated that it has to come under this head. What are those? There are so many incomes which are taxable under head income. However, 56(2) enlists certain incomes which are always chargeable to income tax under the head income from other sources. These are dividend, winning from lotteries, crossword puzzles, race horses. Even though the guy may be doing only his business is that, doing lotteries and doing that, not selling lotteries, mind you. He is buying lotteries and winning lotteries. That is what we are talking about. Like that, he is going to the races. His business is running horses. Betting on horses. Then card games, other games of any sort. All these are coming under this. Even the game shows, somewhere it will be there, other games and all that, of any sort. So those two are there. Next, any sum received by the SC by his employer as contribution to PF. If you remember, we discussed in under PF under, when we talked about business and profession, we said employee's contribution, the moment it is received in the hands of the employee, will become income. So for that only, this is a parallel provision like business and provision. So any sum received by the SC from his employee as contribution to Provident Fund or any other welfare fund for the employees, provided is not taxable under profits and gains. If it is coming under profits, it will not come here. This we have already seen. As per the meaning of income, contribution of the employee deducted by the employer is treated as income of the employer. But if the employer deposits such amount on or before the due date applicable for such contribution, he will be allowed as a deduction of the same. The parallel provision we have already seen, 36(1)(5)(a). These are the parallel provision. Law therefore treats his contribution as of the employee as income of the employer in the first instance. So first it is employee's contribution is taken as income, and then it is allowed as expenditure. As far as employee's contribution is concerned, that is anyway an expenditure for the employer, so it will come only here as an expenditure. It will be disallowed. But here it is not like that. If it has to, there is no expenditure here, it's collecting and paying it. I think we have adequately discussed this when we did business. What is the next one? Income by way of interest on securities, that is debenture interest. All that is not chargeable under, provided it's not chargeable under the head profits and gains. Income from machinery, plant or furniture belonging to the assessee and let out on hire, provided the income is not chargeable to income tax under profits and gains. This also we discussed when we did composite rent, which is also going to come now, where the C let on hire the machinery, plant or furniture belonging to him and also buildings. And letting out of the building is inseparable from the letting out of the said machinery. The plant and or furniture, the plant or furniture, the income from such letting of what? Of the building will also come here. See, if you remember, we did composite rent under house property. What it means? He is letting out building and machinery. Ideally, when the rent agreement or the agreement is written, this should be separately given 2 lakhs, say, and this should be, say, 1 lakh. If it is separately given, this will get taxed under house property. This will get taxed under other sources. Very clear. But if there is no breakup of this and he's saying rent for both, this thing is 3 lakhs of both these put together, no bifurcation is given in the agreement, then entire amount will be taxed under other sources. This is what this says, nothing else. So that means it is, if he doesn't do this, other sources income will be more. The problem between other sources and house property is that in house property you got standard deduction and you get interest. All those things, there are extra provisions, there is no question. We will go further and see what are the deductions available under other sources. Then we will realize which is better. All these are simple items only, don't worry. Now the other one, this is again a parallel provision of what is there in business. Any sum received under Keyman insurance, including sum allocated by way of bonus on such policy, if such income is not taxable under salaries or profits and gains. Under business also, this was there, Keyman insurance. So if you are taking a policy on the Keyman, if the proceeds are coming, you will get that will be taxable under the head other sources. Any sum of aggregate value 50,000 exceeds 50,000 without consideration by an individual or a chief from any person on or after 1,000 subject to sentence. This is the most important thing that is there in this chapter, which is gift basically. Interest, we'll see that this is what we are going to look at in detail. Interest on compensation or enhanced compensation. This also enhanced compensation received to the extent which is received 50% will be taxable. Interest of that. There is no other thing. Straight away, it's 50% is taxable. Then we also discussed about advance money. The way it is treated now is very different. The moment the negotiation is in the course of negotiation, we have gotten money, and the advance received means if you are going to sell a land, he saw this as a problem or a property, and what happens? He has received 50,000, but the sale did not take place. On agreement, he got 50,000, but ultimately the sale did not take place. When that happens, this 50,000 will become income of this person because he is forfeiting it. Earlier, the law was it will be deducted from the cost later on when he ultimately sells it to somebody. So the example that we saw, if you remember, X gives it to his friend A, gifts. A then makes an agreement with somebody to sell the property B, and he got 50,000. Ultimately, this does not work out. So transaction didn't happen. He forfeited it A. Then later on, he sold it to C. So earlier the provision was this 50,000 was not taxable when he forfeited it. When he sells it, from that cost it will be reduced, whatever is the cost. And in this case, A has got his gift, therefore it was a cost of X. Whatever was cost, from that cost, 2001 cost, it will be deducted. That 50,000 will be deducted, and the balance will be only indexed for the calculation of capital gain for this transaction. But now they have changed it. This is what was earlier. Now they said the moment you forfeit, you pay tax on that under other sources. Whereas Later on, when you do, don't do deduction and all, take the full cost and index it, no problem. So there is a change. This is also important because these are changes that have happened recently. So there is a possibility of asking. These are the incomes which are specified under, in particular under the head other sources. Okay. Now we look at one by one what are the other things that is coming. This is it, what is coming under this, but we'll look at each item wise item. Dividends. Again, dividend, there are different types. Dividends are declared by domestic companies. Dividends or any other distributed income UTI, and dividends declared foreign company. 222 defines dividend as any distribution by, be careful, dividend is a very vast definition. You have to be very careful. Any distribution by the company to shareholders to the extent of accumulated profits, whether capitalized or not, resulting in the full release or any part of the asset. That means cash or some part, something is going out of the company, and on the other side, accumulated profits is getting depleted. Then it's a dividend. Not only that, any distribution to shareholders of debenture stock, with or without any interest, distribution of bonus or preference shares, to the extent of accumulated profits will also form dividend. Mind you, these are not the way you thought. Even these distributions to the extent of accumulated profits can be considered as dividend. What? Distribution to shareholders by the company. Now let's move further. More interesting things are there. Any distribution made by the shareholder by a company on its liquidation, to the extent to which the distribution is attributable to accumulated profits before liquidation, whether capitalized or not, even will become what? This dividend. These are the various characters of dividend, mind you. Be careful. Dangerous provisions. Any next. Any distribution made this version, then note the provisions of section 222 is not attracted where a company merges into other in the scheme of amalgamation. So in case of amalgamation, if it comes, then it will not come. Then the liquidation to shareholders will not be taxed as dividend. Where a company goes into liquidation, assets are distributed in kind to the shareholders, there is no capital gain to the company under section 46, but there is capital gain in the hands of shareholder. This also we have seen when we did capital gain. Please check the notes. That is where we have discussed about the deducting from the consideration price the deemed dividend under section 222C. This we have discussed. Any distribution by a company to a shareholder on account of reduction of capital to the extent of accumulated profits, that also will be dividend. And the last one is the most dangerous one. Most dangerous one is the last one. That's why I'm going to little bit make it big so that you are awake. Any payment 222E subsection E. See, any payment by a company to the extent of accumulated profit, of course, only up to the extent of a company, not being a company in which public are substantially interested. That means public limited company will not get attracted, but public are substantially of any sum of any advance or loan, even loan becomes a dividend in the hands of the shareholder. Even if the company is giving loan to the shareholder in the form of, if they have got accumulated profits, that can also become dividend. Now these are things I'm sure unheard of, right? But then that's the way. To an equity shareholder who holds beneficial, not at all, to an equity shareholder who holds beneficial interest of the ownership of the equity shares not less than 10% in any concern of HUF, AOP, BOI, etc., in which the shareholder is a member or a partner holding more than 20% of the beneficial interest at any time. That means all these people are people who can influence the decision because they are holding at least more than 10%, here more than 20%. Then if to any person on behalf of or for the individual of any shareholder. That means you are not giving directly to them, but you are giving to somebody known to him. Such shareholder here means a shareholder who is beneficial owner of the shareholder of not less than 10%. So these are very difficult provisions to manage, because if you're given as a loan also, it gets attracted. So in a balance sheet, if you look at a loan to a director, first thing, there are so many restrictions in that. Or loan to a shareholder, there are a lot of restrictions. But not only that, in income tax, it can take the character of dividend, and the shareholder may have to pay tax on that. Again, there are certain exceptions. Any advance or loan to a shareholder or a concern in which shareholder is a substantial interest by a company will not be deemed to be a dividend if the loan or advance is given during the normal course of its business, provided the lending is substantial part of the business. For example, bank is giving to a shareholder. It's not in the normal course of business. There's no problem. That is not a problem at all. Similarly, any dividend by a company which is set off by the company against the whole or any part of the loan or advance previously paid by it, which has been treated as deemed dividend under Section 220. Earlier, something has been already taxed, and this amount is being adjusted against that, then it will not get a problem. So don't worry too much about it. Just read it once or twice, and then if there is any problem that has come in the earlier period, you can handle that, because this is an important section. They will not trouble you much here in this, but you will. Similarly, there are certain other cases of exception which is given here. I'm not going into detail. Now, dividend income, even if it is earned in respect of shares held as stock in trade, shall be chargeable under this. That means his job is to invest in shares and get dividend. That means he is doing business in dividend, even in shares. Even then, the dividend will get taxed under other sources. This is also you need to keep in mind. Now, let us look at what are the deductions available. For dividend income, mainly two this thing. One is bank charges, collection charges, collection charges and all. Then interest on loan. Interest on money borrowed for purchasing shares can be claimed as deduction. The interest can be claimed even if no income is earned by way of dividend on the share. So you don't have to earn income, still you can get the interest on loan. It has been held by the Supreme Court that if expenditure has been laid out for the purpose of earning the dividend income, then whether income is actually earned or not is not material, and deduction on account of interest can be claimed. Of course, there is Section 14A that we have to keep in mind, but at the moment, don't worry about it. If the interest is payable outside India, it shall be allowed as deduction, only if tax has been deducted. So that is one condition is there. We allowed only if it is, this we have seen, this is a parallel provision of 40AI. Okay. Let's move on. The not very difficult section, except dividend, there is a lot of there. Now, we have already seen this, all seen, winnings from lotteries, the same thing. What we looked at the charge section, same thing. These are all covered under other sources. So I'm not getting into detail of this. This is nothing much, same thing we are talking about. If the income is net, you have to gross it up. And it is fully taxed. There is no deduction available under these things. No deduction in respect of any expenditure allowance in connection with such income shall be allowed. Entire income of winnings without any expenditure allowance will be taxable. However, expenses relating to activity of owning and maintaining racehorses will be allowable. That is the only thing that is available when you are doing that business. In fact, deduction on Chapter 80 CC to 80U, deduction from gross total income will also not be available if such income is part of total income. So nothing is available. You have to understand, nothing is available. Straight away, suppose you got 60 lakhs as 6 lakhs as, some winnings into 30%. That to slab rate is 30%, maximum rate. That's why it's given here. It's under section BB. So somebody came and told me, sir, I have got deposit. I'm sorry, I have got a lottery for 10 lakhs and I placed it in the fixed deposit. Fixed deposit. So I said, you have to pay tax at 30%. He ran away. Because when we tell the law, nobody wants to listen. And in those days, what used to happen is there's no way of tracking it. So as a result, people escape taxation. Now it is very difficult. These are grossing up when we do the problem. So that means, suppose tax is deducted at source. Suppose you get, say, 1 lakh as lottery. I'm just giving an example. 30% will be deducted and only 70,000 will be given. Now you cannot offer this 1 lakh. You cannot say 70,000 is my income because you have to gross it up. You have to gross it up. That's what is given here. How to calculate the gross amount? So it is nothing but 70,000 divided by 70%, which will come to 1 lakh. You have to gross it up, nothing else. Then next thing that we have mentioned in the charge section is interest on securities. Again, what is coming under interest on securities? Interest on securities means what? Interest on any security by central government, interest on debentures. Thus, securities can be divided into following categories: securities issued by central government, debenture holders by local authority, debenture by companies, debenture by corporation established under Provincial Act. These are certain things, not very important. I'm just saying, mainly debenture sort of thing, where there is a security involved. Here also same, grossing up is required, and how to charge it. If you follow cash basis, you follow cash, otherwise accrual basis. Nothing, these are all, if you read it itself, you know it's nothing complicated. Now, what are the deductions under this? Deduction under this is collection charges, interest on loan, any other expenditure. In dividend, there was nothing called any other expenditure. So if you look at these deductions, the problem is that you don't have section 37 sort of thing like business. Section 37 was a general deduction under business. So that used to be standard thing you could get through. But here it's very restricted. Therefore, it is better to avoid getting taxed under this head. If you allow it to your, unless what is mandatory, you can't help it. It's better to avoid. And under house property also, you've got 30% flat deduction, standard deduction, plus interest, which is if you let out, full amount can be claimed. Now, of course, subject to 2 lakhs is the limit. We'll come to that. I have not discussed this. Now, apart from that, these ones we have already discussed when we just now discussed the charge section, letting out from machinery and plant, composite rent we have already discussed. Okay. Now, what are, if it is these things, what are the deductions that is available? If you take this letting out of machinery and or letting out a building, you can get deduction only these deductions: current repairs, rates and taxes of the building. If on composite rent, rates and taxes, however, shall be subject to 43B. Insurance premium against risk and damage of the premises, the repairs and insurance of machinery plant, depreciation based on block of assets in the same manner as section 32 of the Income Tax Act, any other expenditure. Okay. Then you got family pension pension if it is received. Suppose X is he was employed by Government of India. He died. Therefore, after his death, Mrs. X is getting it. Now, Mrs. X, when he is getting it, there is no employer-employee relationship. Therefore, that pension that is being received by Mrs. X cannot be taxed under salary. It will be taxed under other sources. So, pension received after the death of the employee by any family, legal heirs, it will be taxed under other sources, and there will be a standard deduction of 33.1/3% or 15,000, whichever is less. Again, contribution to employees, this thing we have already discussed when we did that, when we initially discussed about it. That is, I told you, this is treated as income under 224, and deduction, this is a deduction under 36(1)(5)(a) under house business. Same deduction is available here under under other sources. It's a parallel provision. 56 to this thing. Deduction is available under 57(1)(a). So we have already discussed this. I don't want to keep going on. And the most important thing is this one. Income to include gift of money from unrelated persons, where any sum of money, property, immovable or movable, aggregate value of which exceeds 50,000 is received without consideration or adequate consideration by an individual or HCF in any previous year from any person or persons on or after 1/10/2009, the whole of the aggregate value of such sum shall be charged under the head. So this is what are the things can be categorized as follows: any sum of money, gift in cash or by check or draft, immovable property without consideration, immovable property for a consideration less than stamp duty value, movable property without consideration, movable for a consideration which is less than market value. Because today, as far as other sources concerned, this section is the most important section. Under other sources, this is the only thing that is there. That is in this 56(1)(6). I believe they keep changing that section, but then this is what is the crux of it. Meaning of property. Now here we are talking about property. What is property? Means immovable property being land and building or both. Shares and securities, jewelry, archaeological collection, drawings, paintings, sculptures or any other work of art. So where we are talking about property, it means all this. Under movable, what immovable is only this. But the other one is movable, shares, jewelry, archaeological collection, drawing, painting, sculptures, or any work of art. So we look at it in detail. This one we have to look at really in detail. But there are certain situations it will not be treated as income when it is received as a gift. When the sum is received as a gift from whom? From any relative. What is the meaning of relative is given here. This who is a relative is given here. On the occasion of marriage of an individual, by way of inheritance, in contemplation of death, any local authority as defined, if you are receiving it from any local authority or any fund, government, foundation or university, because this is especially when you get grant and all that, or scholarship, all this cannot get taxed. That's why. Otherwise, it's like a gift only. There is no consideration. Then institution of any trust, etc. Sometimes trust gives scholarships also. Any fund or something which is registered, even they give scholarships. So that will not get taxed under this. Relative, again you can understand lot of meanings are there in relative. Who are the things chargeable to tax? Spouse of the individual, brother or sister of the individual, brother or sister of the spouse of the individual, brother or sister or either of the parents of the individual, any lineal ascendant or descendant, any lineal ascendant of the spouse of the individual. I'll give you a chart separately, and spouse of the person referred to in any of the items considered here. So therefore, this section has become very crucial. So we'll look at those details in a problem, then that will be clear for you. Okay.